Welcome to TradeTheMBI.com. This is John. This report is for the 13th. We're starting off the week well, and let's just reference where we were before because we had the beginnings of the opening of a mouth right here of our what we call our snake, where the little cyan runs in between here. Then we popped up above the plus 13.5. This was all signals of potential weakness. ABM was an easy one there, the 28.44 range, but we were looking for somewhere around 28.22. I don't think we quite got that low, did we? Yeah, we got to 20. So my projection is about to 22 range, right in line with our expectations. Now, what's particularly important about this at this moment here is because we're right now at all the ABM levels, and we're at the 76, a break below, and you don't have anything until 27.98. So decent sized range, and that would be a significant run back of quite a bit from that high all the way up to 28.62. So we've also got dip below the extreme. Now that's not horrible if you had a complete reset here and a turnaround, because when you get oversold and you're still all the way up there, not terrible. Particularly though, you've got to have some kind of a reset. And in this particular case, we do. You've got steel reset, you've got green, all of that. All you would need to see is orange just continue straight down, and that would be enough to give a new buy signal. So all in all, this is performing pretty much as expected. We knew that when we were getting higher highs on a lower shakeout, it's not going to work. It never does. Sort of straightforward. NQ certainly is performing right about the same now, so it's at the exact same 76 level. Yes, there have been some differences in value early on, but that's sort of modified itself, and now they're pretty much in alignment. Reading wise, a little bit stronger from the NQ here, because you can see we're not dipping below the red line to start out. Of course, this is pre-market, and it's a little premature to make any significant claims. The interesting part about it, though, and we've talked about this, is that as long as the euro was above our topside range that we had right here in this mid 115 range, that would support the market. A dip below that is problematic because it affects earnings in the sense that you don't get the beneficial trade exchange rate that was kind of bolstering all European sales. And so as that moves lower, it creates a problem from a valuation standpoint, at least from an earnings view. And then, of course, flight to quality, meaning to treasuries, and this, again, unusual move simply because with rates rising significantly, this is sort of pricing in the idea that there's going to be some kind of, fallout to where you're going to end up back with rates dropping, not rising. So it's unusual. But what happens when you get people cycling out of stocks, moving to a little bit more safety, because there's just enough yield to justify it, and the inflation numbers still aren't producing enough to warrant if you want to call it terror or whatever. And oil is still maintaining this little bit of an artificial rise. It's sort of what I've been referring to as the new gold, meaning that it's turned into a bit more of a liquid kind of hedge against inflation, and that is an interesting play, but I think we've seen it over the time, particularly in this gold route that we've been seeing for quite some time. Though you can notice this strong improvement in the shakeout, even though we're still at minus 20. That's still crazy. You got to get above that minus 13 before there's any significant chance of a breakout move of any kind. But it has been interesting that if we can correlate this exact same time to what we see in the oil chart from the turn up. So this is how they fool participants, and then when they cycle out of it, it flips. So if we go back to Friday's action, pretty much a continuation of what we saw from the selling that began on the Thursday late, and we broke down, opened up, produced the white candles, which meant we were going to make new lows, retrace, we marked that. It sort of got old. We ended up with a lot of them, which is very interesting because it is not an easy configuration to acquire, which just lets you know that the algo activity is very strong right now and worth paying note to, because in this particular case, The last white one, with the open right there, was around the 31 range. We ended up making the new lows with the blue candles, got above the 23%, which is perfect for a little mini buy. Got up above the 50 there, which was pretty decent. And then you ended up with a gold candle below the 50, and it popped, got up to the 76, but that still usually produces the return back. And not to mention, we already had the callback for the 2831 level, and then boom, it blew below that right as we opened for the futures setup first thing, and then boom, proceeded to make new lows as that euro started to fade, retraced back up to the 50% here and faded right back to fill it in. At this particular point, you've got an improved shakeout setup and certainly a much better DOC. Let me just enlarge this instead of trying to slide it over, because it's just easier for us to see it close up. There was so much good action happening with all of this that it was really fun to follow it, because you had very decent buy setups with what we would call these, particularly coming off this second run. And I often refer to a strong closing like that as the late Friday buyers, but oftentimes a little bit too anxious. But to me, it was a decent opportunity to short on the opening of the mouth that began right before we got to the close. Ended up with a little bit of heat and added there, but worked out just fine, because I was expecting that 2831 at least minimum from a retrace standpoint, and not only did it do that, but it filled right past through it. So that's the power of knowing that it's going to. It's not, I'm not speculating. The percentages are so far in my favor that to ignore it is to just basically throw money away. So why would you do that? It's the same thing with riding the dark red candles below that 23%. Very effective. Not always clean. This time, this one popped up above, closed right at it, but was right at a buy signal, so would not be objecting to the cover point there, particularly when I'm no longer looking at below the red line. Though, at that point, I've got a pretty good idea that I'm going to be coming back to, more likely than not, you've got one of those giant wicks I would be looking for right about that open, which is exactly where we came back to fill it. Because sometimes you get this follow through where it just hits a bunch of open stops and it doesn't really trade there for much, and it just boom comes right back up to that base point. So all in all, this was I think some really strong action, and it's very consistent with some of the adjustments that I had made in the algos for starting this month, as we knew that we would have an increase in volatility, and that's exactly what we're getting, which suits me just fine. And the more of these little setups that we get that give us guaranteed retrace points, both at the bottoms and at peaks, it just makes it so much easier to follow, and we love that. So all in all, we're just going to keep taking what they're giving us, because what they're giving us is a lot of easy free range trades. So for that, I will keep putting up charts on the Skype chat as warranted, but so far this has been pretty clean stuff. Trade well, and talk to you later.